right? Market structure refers to overall framework of patterns and price movement following the market, right? And what is important? It's just help traders to identify current price conditions, identifying trends, and making supply and demand, creating swing highs, swing low. It's very, very simple. Okay. Now, the first thing in market structure is to identify trends, uptrends and downtrends and reversals. So this is the bullish scenario. Higher high, higher low, higher high, higher low, higher high. Right? Bullish scenario. And the bearish scenario is also very, very simple. Right? Identifying the trend, right? And we have the consolidation phase, right? Don't mind about my drawings. And the most important thing here is to identify the trend. And after understanding the trend, you have to understand the supply and demand. Where is the supply? Where is the demand? You have to analyze swing highs. You have the supply zone, which is here. This is the supply zone. This is the demand zone, sorry. Demand zone. Demand zone. And we have our supply zone. Supply zone. Supply zone. So it's very, very simple. We have our swing highs, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. So market structure is very, very important. It doesn't matter if you trade smart money concept, price action, ICT, anything you trade. You have to understand market structure. It's the base core of trading, base core. Before you develop any trading strategy, this is the first thing you have to understand. And this is just part one. I'll go into details. We also have the framework. All right, I'll take you through it. Sorry. I'll take you through it, and it's very, very simple. And if I show you, we have our breakout structure to the upside. And you have another breakout structure to the upside. Have another breakout structure to the upside. We have another breakout. We have a change of character. Now here we get a change of character. This is a reversal. After this demand zone we have in here was disrespected, right? Then you have a change of character to the downside, break of structure to the downside, continuation, and have another break of structure to the downside, and have another continuation, break of structure to the downside. Let me first delete this. You're gonna get confused. Then this is our market structure. It's very simple. You can see that the market was moving up. Then we got our change of character. Then it went down. Right? We have the bullish scenario and you have the bearish scenario. It's very, very, very simple. I'll go into details because we have the external structure and you have the internal structure. And you have our entry, our cash flow, our order flow structure. And one of the best things is to master market structure. It will help you to know where the market is moving, right? Without trading blindly, without just taking random trades. It will help you from A up to Z. And it will be simple for you to understand, to identify the demand zone, supply zone, breaker blocks, swing highs, swing lows, without doubting yourself, without like guessing trades. This is the base core, right? And I'll go through a lot of stuff. I'll go through understanding the trend, which I'm trying to do now, but we have to go into details in part 2. We're going to understand supply and demand, identifying swing lows and swing highs. And we're going to learn about improving mostly on our entry points, point of interest, limited. Okay, that's it guys, and that's part 1 on market structure, and see you in part 2. Peace out.